Decode next week's key data with WeTrade. On 13 January at 9:30 p.m., the CPI report is released. The market focus has shifted from peak inflation to how resilient core services inflation is, which directly determines how much room the Fed has to pivot. If core CPI comes in hotter than expected, it will likely weaken rate cut expectations and weigh on treasuries and tech. If it confirms cooling, it strengthens the case for cuts and supports risk assets. On 14 January at 9:30 p.m., the U.S. November retail sales figure is released. This report tests how much high interest rates are really hitting consumer demand. If spending stays strong, it supports the soft landing view and helps cyclical stocks. But if weakness continues, markets could shift into a recession trade and rotate into safe havens. Later at 11:30 p.m., the EIA weekly crude inventory report is out. A bigger than expected build could push oil prices lower. That would ease pressure on consumers and help the Fed keep inflation under control. On 15 January at 9:30 p.m., the focus turns to U.S. initial jobless claims. It is a high-frequency read on whether the labor market is starting to loosen. If claims keep falling, it supports the case for delaying easing and pushes back rate cut expectations. If claims rise, it signals softer jobs and can quickly lift rate cut expectations. Together, these 3 days of key data will set the tone for early year trading. They do not just answer when cuts might come, but also how solid the economy really is.